Good evening and welcome to another webinar here at FP Markets. Apologies for the slight confusion over the top there. I've been sort of going through so many different things at the moment, and for all of that, why I started with that point is who would have thought that I'd be sitting here talking to you about Brexit still, and looking at Brexit from the point of view that although technically Brexit has actually happened, that there is still a final hurdle that could actually see it economically being significantly hurt by what is going on. Because we are now in the transition period. Brexit was actually signed off and signed, sealed, and delivered at the start of this year. They then had 11 months in the transition period to get an FTA, and we'll talk about the free trade agreements because they are a major part of what is going on right now and a major reason why the final hurdle, as I'm calling it, is becoming a massive headache. It don't ever underestimate a politician to politic. It is just phenomenal to see that even this year, with all of the horrendous things that are going on with COVID, particularly what's ravaging the EU and the UK, that they are still unable to actually work to get something done to actually make this happen. So before I go any further, just as always, have your read through of the disclaimer, but I'm just going to sit here and talk about a few things. When this first happened, I was actually sitting on a trading floor in 2016 during the Brexit vote. I was watching it live because, again, like with the US presidential elections, of those that were listening to my series on that, it was during the day for us here in the Asian regions, for us here in Australia. It was happening throughout the day, and to watch what was going on, how it was happening, how the vote happened. And I was working for an organization that had a lot of UK expats, and the almost the dumbfounded look on their, and then the despondence that came with it was amazing. Now, as I say with all of these things, and I'll say it very clearly again, I am completely apolitical when it comes to this. I don't believe either way whether Brexit is a good or a bad thing, because I'm not from the UK, although I have lived there and I've got many friends from there. I'm not from the UK, and I don't have a belief either or. There are those that have very strong opinions for both, and that's very understandable. It is and has been quite a political football, to say the least. But in saying that, the response that I have to say is this: the politics is what we are now going through, and we are dealing with lawyers, we are dealing with politicians using time, and that is what we're going to talk about tonight with the trades particularly. At the moment, time is being used as a negotiator. Do not make any qualms about that. There is no doubt that is what is going on. We have a scenario where we are running very close to the wind, and with that in mind, the close to the wind, realistically, everything comes down to what happens probably in the next 2 weeks. We have some pretty big dates coming up, and I'll go through those in a minute, particularly starting this week. All of that plays into it. You've got a whole heap of political points of view. You've also got issues domestically for the UK, issues what I'll call domestically for the EU as well, that are causing this issue. But in saying that, what we now have is that on the 10th and the 11th of December, we have the EU summit. And the EU summit, like when Brexit was being negotiated in 2018 and 2019, is the be all and end all to some extent. It caused Theresa May to lose her prime ministership. It will be a final signed, sealed, and delivered of whether or not Brexit not only has happened, but a clean Brexit happens without a hard Brexit of no deals. Now, there's going to be apologies for this. There is going to be a bit of words on screens. I hate doing presentations with word on screens, but I think it's probably worth it from the point of view that let's get an understanding about the political legal reasoning that this is going down to the wire, and why there is still big issues going on with, particularly at the moment. Last time we talked about Brexit was the border in Ireland and Northern Ireland, and whether or not you had what was referred to as the backstop and how the backstop would work, because they didn't want to have a border inside the island of Ireland. They wanted to have free flow of people. The issue was that the Northern Ireland part of Ireland is considered part of the UK for obvious reasons. And how do you not have this backdoor arrangement where people could go through the Republic of Ireland, walk across the border into Northern Ireland, then walk across into the UK, and vice versa? All of that was a big political nightmare. There was history involved with it, blah, blah, blah. The border that's now becoming an issue, it's not really a border, it's the straits, and it's fishing. And so the the straits between France, Belgium, and the Netherlands are now a big sticking point, and let's start talking about that with regards to where it sits and what that actually means. So, where are we now? Right now, the UK, and let's probably look at this and read it out, is sharing the same rules as the EU. So that's workers' rights, competition, environment policy, blah, 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 all that kind of stuff. The stuff that was probably part of the trigger for Brexit from particularly nationalist ideas. Let's also be honest, in England, not necessarily in the UK. Scotland's made it very clear that they wanted to stay in there. They didn't. But this is what is currently, as of right this second, still going on. And not only that, the EU is insisting that the UK must stick pretty closely to these rules. And this is where the argy-bargy is coming about. This is where the free trade agreement is getting stuck, because part of the idea of Brexit was that UK businesses particularly were to have more freedom. The city, so London, was to have more financial freedom. You weren't going to have the legal issues and wranglings of the Westminster system being overridden by Brussels. And that was a big, big sticking point, particularly those on the common law side of things. But all of that is why the UK government wants to move away from it, and that's what Brexit was about. But right now, this is the current setting that we have until the 31st of December. What happens after that is basically, again, if I'm going to I'll use Australia as the example for this. It's the UK will probably start to feel not the same full disadvantages that Australia has when we go to the EU, but some of them. So citizens moving between the UK and the EU to work, live, retire, etc., don't have that automatic ability to do so, which is a staggering statistic, because if you look at the amount of expats in the EU from the UK, it's actually their largest place. The next biggest one is here in Australia. So about almost 2.6 million UK or former UK residents live in the European Union. The next, about 1.3, 1.4 million people live in Australia. And then it drops down to about 700,000 in the US. So the UK is quite a big moving country. Here, the UK population, the British population do like to move elsewhere. So this is going to be a big, big issue for particularly UK nationals, so British nationals who tend to actually go on holidays, but not just that, to live and work in the EU. They will now have to go through visa processes they've never had to, in a lot of them, in living memory. You go back to 1973 when Margaret Thatcher signed the UK up to the EU ideal. That was all part of this, to live, work, to free flow of borders, free markets, blah, 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 was that idea. All of that will stop on January 1st. This is whether we get a hard Brexit or not. So just keep this in mind. But the other way to look at it is the UK is putting in a similar system to that of Australia with the 100-point system. So part of Brexit's nationalist ideas was particularly countries like Poland and the Eastern blocs that were seeing huge inflows of people moving into areas that tend to be seen as a unionist idea, and particularly those that are blue-collar workers, which is trades, was being pulled in by particularly the Poles, who are very, very skilled in that area, but were charging significantly less, and therefore putting, born and bred UK people into scenarios where work was being cheapened and work was not as abundant as it was. That will be very interesting going forward, because it will certainly push up pricing from just simple economics. It will be very interesting to see what happens when you do have a slowing of immigration, of particularly those Eastern European blocs who have moved into particularly traditional trades that have actually made it quite useful for the whole population. Another one to watch quite closely. The big one is the annual payments. So To be part of the EU, it does and goes by GDP, it goes by your size. And as Boris Johnson was pointing out on the side of a bus in 2016, the UK was making around about 1.6 billion pounds of payments to the EU every year. They no longer have to do that, so that would they would argue as a benefit. Um, Again, you don't have to really worry about the next point. I mean, for obvious reasons, you are now longer part of the EU. The UK will have to basically join America, join Canada, join Australia, and standing in other queues for the passport. But that's not really a huge issue. But it will be quite interesting when transport comes through the tunnel. So when it comes from Calais and gets across into Dover, that will be a big quest and a big test for how this works. Again, the backstop is the other one. It's not going to be as bad. So the Republic of Ireland moving into Northern Ireland won't have the same issue. But do not mistake that there will be big holdups with transport coming through the tunnel. And that is going to be an issue that's going to be very interesting. And that actually brings me to what is important by this and why I am going through all this quite slowly. And I understand I will get to trade. Don't worry, we'll get there. Is that economically there will be a interesting 90-day period in my view at the start of next year. How the customs system works between Calais and Dover, how you see the ferry systems working also between Portsmouth, etc. All of that kind of logistics that will definitely hold that up. Now, I'll highlight why that's a problem coming up, because it's not just the UK side, it's the EU side, and big EU economies, Germany, the Netherlands, the French, they will have concerns by this as well. Considering that the UK for a lot of these places is actually some of their biggest markets in certain industries. Agriculture is a standout, manufacturing is a standout, but we'll come to that as well, because that's where the big angst comes about. Here are the sticking points, and this is why a possible hard Brexit is still on. And by a hard Brexit, what I mean by that is that the EU has officially signed off on Brexit. The transition period comes to an end. There's no free trade agreements or agreements with most of the nations in the EU, and Brexit leaves and has to basically go down and apply to the fairly standard principles from the World Trade Organization. And considering the way the UK works, considering the way the UK economy has been intertwined in the EU over the last 45 years, that is certainly going to be a concern. But the EU's issue is that the UK is going to find financial gain and use its own firms over the EU. Now, that particularly comes down to the city. The biggest issue that a lot of the EU has an issue with is that the city is set up twofold. One is financial. The other thing that I think sometimes people forget is that the UK and the Westminster legal system is one of the most used international systems around. If you have a trade dispute between, again, let's just for argument's sake say it's the US and Argentina, for example, they can't come to an agreement about which legal system to use. What a lot of nations in that scenario in international trade does is they go to the UK and use the UK system to actually negotiate through international trade disputes. And they use UK Westminster law to do that. And again, this is part of where the EU has getting worried, is that UK firms will start to take financial advantage of that positioning and go away from it. It's again one of the arguments that the Brexiteers used, is that the Westminster system was starting to be impinged by Brussels. The ability to actually have the rule of law as they apply to it on a common basis rather than on a civil basis was being impinged. All of that is an interesting one, but it's certainly the sticking point right now in terms of where it stands. UK is also concerned, and this is the big one that's coming about, why I raised the Netherlands, Belgium, and France. So the UK is concerned about who will be allowed to fish in its waters. So the other interesting thing around this is that technically right now, until the 31st of December, that the English Channel is actually considered as part of the waters of the European Union. It includes the Northern Sea, all this kind of space. All of a sudden, you're now going to have a scenario where you've got UK waters and you've got EU waters. The other part of why that's so interesting is that the Netherlands, Belgium, and France obviously are squashed into the English Channel to some extent, particularly the low countries in Belgium and the Netherlands. And at what point are they in UK waters, and at what point are they in EU waters? How does fishing in that space continue, particularly considering that the Netherlands can push further north and start going up the east coast of the UK? When is UK waters being met, and when is it EU waters? And also the other part that brings on that is when do you actually hit international waters? And all that becomes around of what is a very, very lucrative market for obvious reasons. The UK has tended to fish those areas and exported them into the EU without any tariffs on top of it, etc., etc. The Netherlands is a very high fish-eating nation, same with Belgians, and that's where their concern is. Do they all of a sudden start their own fisheries businesses, and that's the UK's concern? That is a big sticking point. I know it's a weird one to say, but agriculture is always politically charged. It's a big, big football, and it is one that I think will actually possibly push this a lot further than most people expected. I personally think a deal will get done. Don't get me wrong, but fishing and the fisheries licenses and international waters, borders, etc., blah blah blah, are a point that could actually be quite heavily raised next week on the 10th and the 11th. Already, Emmanuel Macron is making all the noise that they are concerned about French fisheries. You're also saying Mark Rutte, who is the Prime Minister of the Netherlands. He is very, very passionate about this and is certainly pushing for the idea that there needs to be concessions here. And as we know, for good reason, the EU fears that the UK is trying to change the agreement, particularly complicating issues in Northern Ireland that have already been going through, and having that backstop border, that ability to possibly do trading through Northern Ireland into the Republic of Ireland and then across is certainly a big fear for Brussels. And some people believe that it's the Republic of Ireland's the interesting one here. They're certainly trying to stay with the EU point of view, but they are very, very likely to prosper from this. If you could see a scenario where there was a little bit of a a backstop becoming more of a backdoor, the Republic of Ireland will become quite a port for movement of goods as people try and get through the Republic of Ireland into Northern Ireland and therefore into the UK and vice versa. So it's a decent sticking point, but again, where the issues are coming from. Just one sec. Sorry, guys. So, what would happen if, and this is starting to get towards the volatility, right? So now we need to start looking at the ideas. Okay, what will create volatility in the next 31 days or 30 days, considering that the 1st of December is now over? We're sitting in it right now. What would cause that volatility come up? What would also create issues longer term economically to create volatility? And when I talk about this, let's also point out this. Brexit is becoming idiosyncratic. It's realistically just a pound problem. And to some extent, realistically, it's probably a euro sterling problem rather than anything else. At the moment, COVID also has to be put out there as being a massive, massive contributor to currency movements and vols. But political game plays go hand in hand with this. We know very clearly, having a look at what's been going on, particularly over the last couple of weeks, that most of this, in terms of the movement that we're seeing in implied vols, the robust performance of the pound, it broadly supports the idea that agreement's going to happen, but it's also because we are seeing COVID numbers in the UK and also in the EU starting to come under control. So I will put that out there. This is not the only impactor from a macroeconomics perspective into FX. And as I said, if we're being completely honest, this is an idiosyncratic movement that's realistically moving in the idea, particularly around euro sterling, and I'll concentrate on that. But this is what we've talked about. Initially, if we had a hard Brexit, so come the 31st of December, the UK falls out of the EU without any sort of major negotiations, etc. You would actually see initially higher prices. The delay in transportation, I think, is a big one. The impact of that is unknown, and I think even with a Brexit deal and a free trade agreement, I still think that's completely underappreciated. They are certainly scrambling to try and improve, widen, even border check areas just for transportation. It is the one spot that I think will be a big part of the problem. You've also now got a scenario where the UK, although right now it's automatically part of the EU trade deal, so it's got 70 countries it's got automatic trade deals with. It's done 50, but there will be 20 that it doesn't have done and dusted. And therefore, there will be tariffs put on with countries that it originally hadn't. Now, they're not huge movers, but what I'd highlight, which is quite interesting from this, is that of those 50 countries, around about 8% of them, they represent about 8% of the UK's total exports. Because at the moment, the big ones that are missing are the majority of the EU, because we don't have a free trade agreement. And what will be different about that is that until that gets done, the UK is probably likely to see some impact economically from higher taxation, higher tariffing. Therefore, you also see the normal economic impact of that, is that with prices being more expensive for UK goods into the EU, that the use of the UK goods will fall. All of that is what will start playing into the pound. And the interesting thing is that you've been seeing that for the last 5 years, and I'm not going to drill too much into that because we're about to come up on it. But the UK, let's also point this out, that a hard Brexit would put it behind the 8 ball. It is already a little bit late to the party with getting the deals that are expected to have done finished by this time of the year. We're still obviously discussing, as of tonight, the issues around the EU and getting a free trade agreement for Brexit. It's also, although it's in talks with countries like the US and also us here in Australia, no deals have realistically been reached. Now, it has done a deal with Japan, which happened around about a week and a half ago. It would mean about 99.8% of UK products would be tariff-free into Japan, and pretty much vice versa. But in saying that, at the moment, UK-Japanese movement of import exports for both countries, the UK and Japan, for each country actually represents about 2% of their global export market. So wouldn't say it's huge. It's not insignificant. Don't get me wrong, but it's not huge. The country that I think would make a big difference is if the UK got a deal with the US. Now that would be a big contributor. I wouldn't worry too much about us here in Australia. We are not a huge mover. It'll certainly help us, but not for the UK. The UK sits about 7th on our largest export market. For us, the other way around, we unfortunately sit at around about 20. So I'm not surprised that the UK isn't jumping yet, although politically you have seen Boris Johnson stand up and saying it would make complete sense, and that's true. But in terms of it actual being, the dollar pusher that it is, they would be more likely to be talking to Washington than they are going to be talking to Canberra. But that's where we stand. And as I said, the hard Brexit would be quite a volatile market moving event. And when we find that out, and as I said, the EU meeting next week, the 10th and 11th, will certainly show that. Don't get me wrong, at the moment, that the EU is in London. They are sitting there negotiating hard. They are certainly trying to get through it as much as they can. The word keeps getting thrown around is we are determined to get a deal. There's not, are we confident to get a deal? The response coming back at the moment is we're determined to get a deal, which would suggest there's still a reasonable way away in where they sit. And what's interesting about that is whether or not that's actually been priced in, and that's probably where we're coming up to. So this is the other part that's the big risk of a hard Brexit. So it's not just a UK headwind, it's a EU headwind as well. So this horrible looking chart, and I do apologize, I couldn't get it better for you, is the import exports from the UK to the EU over the last basically 23 years. Now, you can see at the top end, 2020, COVID's made a pretty big impact on that. But what you have been seeing is it's actually, even since the whole Brexit issue, which happened around about here, what has been interesting is the volatility in this has been going up. And as deals have been done and blah, 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 but you can see that the import of goods into the UK from Europe is significant in terms of what it is. And why I highlight that is that France, Germany, and the Netherlands have a big problem here. France is a really good one to highlight, and part of the reason why you've seen Nicolas Sarkozy back in the day, and also Emmanuel Macron being quite strong on this view around why they want to basically sort of push the UK to come to the party and actually negotiate well for a French idea, is that France is heavily dependent on the UK for their agriculture exports. So the biggest market outside of themselves, the French themselves, for champagne, for example, is the UK. And it's not by a small margin, it's a country mile between its next biggest partner, which is China. In terms of that space, so the French, the Germans, and the Dutch are feeling this as well. I mean, the Dutch export a huge amount of product, particularly tech product, particularly energy. I mean, Royal Dutch Shell is obviously a joint Anglo-Dutch entity, but you also look at it from the other types they have across the channel. There's a lot to lose from both sides of this, and as you can see, imports particularly have, I mean, COVID aside, let's put that to one side, imports have only steadily been increasing into the UK from the EU. So the EU probably has a scenario where it's looking at it from the point of view that it actually wants to get a deal done, because it does have quite a headwind with regards to its what will now be 26 member nations that actually rely on the UK as a big part of them. So you can also see there that over the last sort of, particularly the last 18 months, even with COVID, what's going on, the UK, even back to 2016, was starting to flatline with its exports to Europe. And again, some people argue that's part of the reason why Brexit happened, was because they were competitively being disadvantaged by Eastern blocs with what they were offering. And again, you look at a nation like Germany and France, particularly with what they do in manufacturing, they are better at it than the UK. Let's not beat around the bush. And so that's all part of this. But that chart, I think, is very telling, that it actually suggests, and to me anyway, the EU, although they're talking hard, they want a deal. They will want a deal because the impact on their member nations on having tariffs on their exports to the UK will be detrimental in terms of where they sit. So let's start talking about what actually matters. Let's actually start talking about, as I said, it's pretty much the pound and realistically euro sterling. But let's have a look at the performance of the pound. Basically, apologies for the typo there, Pat fast 5 years. If you have a look at this chart, so this is the G10, and you can see that the last 5 years has been a pretty tough time for the pound. The economic argument that comes out of London, for obvious reasons, is that their trade is now becoming much more attractive. The fact that the pound has fallen that much against all of those currencies certainly makes UK exports that much more attractive, which possibly some would argue explains this, is that all of a sudden the UK is becoming competitive in markets they otherwise weren't, because the pound is so expensive. And that, that is certainly part of it. I would argue that they have had domestic problems at home. You have seen the Bank of England flirt with negative rates, although they're probably not in the same basket as what's going on with the JPY or the Euro with regards to BOJ or the ECB. But in saying that, they have had to support their economy quite significantly. Brexit has been a headache more for the UK than it has for the EU. The domestic performance of their economy has been sluggish. And that is certainly reflected with what you're seeing going on inside this chart. It's also the belief that Brexit will actually be initially a headwind in terms of what it's meant. And that, I think, has been priced in, which probably now brings me to this point, is that if we suggest that the EU wants the trade deal, they want to get some form of free trade agreement through, considering it's actually in their interest to get this done because of their imports into the UK, then there is some really interesting suggestions that there's upside here. So if for 1 second we can just put COVID to one side, let's make the theoretical assumption, and it's more than a theoretical, the realistically good chance assumption that a vaccination happens in 2021 and happens early. That the initial issues with Brexit, and this is where, if those of you out there that are trading vols might want to slightly switch off what I'm about to say, because I'm about to talk about a little bit longer term here. The initial scenario will be volatile. I'm not going to deny that. I think you could look at cable sort of punching in and around, a couple of cent movements through, a day or two. But it's telling you something. It's telling you that it wants to keep possibly even pushing up to about 135. It may not actually drop back into the 120 cent handle for the foreseeable future if everything goes to plan. And that's what I'm talking about here, is that the vaccination happens, the trade deal happens, the UK has all of this problem, all of the Brexit issues, all of the economic issues that are going to come with Brexit priced into it, because they are priced into it. I mean, as I said, Brexit's been signed, sealed, and delivered. It happened in January. We're in the transmission period at the moment, and we're just waiting to do the final deal for an FTA on the 31st. So Brexit's happening. Brexit's happened. Has this chart on screen suggested that we've actually gone a little bit overboard with our pressure on the pound? And that's a question I think we need to look at here, because let's actually drill into it. Let's have a look at euro sterling. So this here is from Reuters. This is taking 26 economists and analysts as their median, mean, max and mins about where they sort of see things going for the rest of this year, and then moving into basically the end of September, probably actually basically going to a year over the next period. Now, you can see very clearly that there is a couple of people there that are quite pessimistic, that believe the pound will fall further, that Brexit's going to be quite a problem, and have got a target of 96p, apologies. The minimum is everything's going completely, absolutely right and moving towards 82. But what I would highlight there is that it's the middle points, those median points, that estimate, that's what they call their smart estimate, which is where they average through those 26. So they actually don't see much change, which to me is quite interesting. And the reason I say that is what it's probably saying is that we're actually now at status quo. That we're actually now at a point where, the whole Brexit scenario will probably and is priced in. We are waiting to see how this transitions. Euro sterling is probably likely now at fair value in terms of where we sit, which is interesting in itself, but it doesn't give you the possibility of what the gyrations could be. And as you can see, even this year with what's gone on, the bigger problem actually happened at the back end of last year. And you can see there that, as we went through this scenario where we sort of fell out of bed at December last year, the Brexit negotiations were going down to the wire. You had all of that kind of problems with posturing from Boris Johnson. You had him looking at tossing out the deal. I mean, it seems like an eternity ago, but it wasn't. It was only this time last year. And you can see that it caused the pound to absolutely fall out of bed and the euro just go through the roof. And we went through from 84 all the way up to as high as 94. So 10 cents in the space of around about 3 weeks. And then we finally, at the start of this year, got the deal. But as you can see, at the end of Christmas, it basically was, we finally got to a scenario where there was going to be an acceptance from Westminster for the deal to happen. Don't write that off. I don't expect it to be that kind of bigger mover, but you could certainly make the argument that this negotiation could get quite jittery, and you could see vol, and you could see quite decent vol moving up. The initial reaction, and you can see pretty much what's been going on since, COVID got somewhat under control, inverted commas, is that linear 45-degree decline is that you've actually started to go down the idea that things are getting back on track, that you're actually now starting to see, negotiations happening, everything's moving in the right direction. Pound's probably been oversold over the last couple of years, that negotiations are likely to happen. And that's why the minimum one's quite interesting, is that the minimum one there is suggesting that we get a deal, the UK gets through this, so does the EU. They get everything that works in their favour. There is no longer tariffing that could be detrimental economically. We can start to see expansion. The ECB and also the BOE are suggesting that a Brexit deal that actually can be meaningful would be economically positive from here. And that, I think, is what you're starting to see in that trend. And that's what's sort of making me sit up. Where to from here is that I think the most likely outcome is a deal. I think the most likely outcome is a COVID vaccination will hit by March next year. And I'm actually more of the view that I think there are too many people that are believing that politics will play out and are missing the point, rather than actually what this is starting to tell me, which is that a deal's going to be done and there's every chance that the pound from here actually starts to appreciate. And drilling that in further, let's have a look at what's been going on in the last couple of weeks. As we started to get closer and closer towards the dates, we've actually started to see proper negotiations going on across the road in terms of Brussels going to London and London going to Brussels. You can see that that trend is strengthening, and it's pretty strong. There isn't actually anything to really highlight from a macroeconomic perspective that's actually getting in the way. There's been issues, and you can see at the moment there's been that uptick with the pair. So obviously the euro strengthening there. That's come down to this idea that we are now getting down to time. The EU, this in the last sort of 10 days, has started to talk about being a little bit stronger, particularly around fishing. So if you have a look at that really strong green candle at the end there, that was last week when Emmanuel Macron actually stood up and said, no, 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 we need to actually very, very strongly push back against what the UK is doing around the agriculture sector, and that was seen as a pound weakener. But in the main, I believe this chart is telling you that a deal is going to get done, and I also believe this chart is telling you that vol will be minimal if everything keeps going to plan. Now, as I said at the start of this, and I'll say it again, there is no such thing as a plan when you get to talk about politicians. Politicians have their own politic to play, and do not be surprised, particularly this week, if you do see somebody like Boris Johnson or Dominic Raab come out and say something that could try and push trade tensions a little bit harder. Don't be surprised also to see, particularly Mark Rutte and also Emmanuel Macron saying similar things they have. The one to watch here who's been interesting is Angela Merkel. And why I highlight her is that part of the decline that you've seen in those two red candles at the back end there is that she came out and said very clearly that we understand there is issues with Belgium, the Netherlands, and France, that we want to continue negotiations and that we want a deal. If Germany's saying that, that is a big step forward. Never underestimate how powerful Germany is, and never underestimate that the largest economy in the EU will probably, almost hold the whip hand if it was looking at it from a parliament perspective, and pull a lot of these members into states, even a France, even a Netherlands, which are big hitters. They will find a deal. And I think that's what we're being told from the charts that are going on right now, particularly in this pair. And again, drilling in even further, the channel is telling us that. And the channel is pretty strong. And you can see it's touched a bit of it at the top, for those of you that do like channels, and I tend to. And it is pretty strong in this review, and that includes the fact that you can see this channel has gone on and gone through the second or third wave. So second wave in the EU, third wave in the UK of COVID. There hasn't really been a huge amount of volatility in here with the health crisis that's going on, particularly in those two parts of the world where they have been ravaged by COVID-19. It is very clear that this is one pair that probably is playing out very clearly to the very final edge, that final hurdle of Brexit. And that's where I see it happening, and why it is so interesting right now is that I think, all things being equal, the pound will continue to appreciate into this, because as I showed you before, over the last 5 years, it has been absolutely trounced, and trounced probably too hard. And there may finally be a little bit of unwinding. Now, I've spoken for a lot there, I understand. So what I'm going to do is I'm going to stop talking for now, and I'm going to open up to questions. So if you've got some question, guys, please flick them into your question box. Oh, sorry, Paul, I did not see that. So why the spike up in 2006? Now, I assume you are talking about, wrong thing, hang on a sec. You are talking about this with regards to what happened in exports. That's a good question. I actually did a lot of drilling into that, and it's weird. It's not necessarily a weird reasoning. It's almost like a reporting error, I think is a way to say it to you, Paul. It's nothing more that I can argue than that. And you can see it happened very fast and went away very quickly. I couldn't get to the bottom of exactly what that was, because it's uniformed across exports and imports. Some argue it's a currency spike and a currency issue. Some argue that it was a change of accounting across how the EU was taking import exports. But again, I apologize to you, Paul. I don't actually have a full answer as to what exactly that was. And I'd rather be dead honest with you and tell you that I when I saw that too, I had a really good look at that. I was like, that is bizarre. I need to understand what that is. And nothing I did in my research really gave me a good example or an answer as to what the hell that was. I do apologize for that exactly. So, as I said, over on your GoToWebinar control panel, there is a bar there that says questions. Please click down on it. And if you've got any questions for me, please fire away. Are there any questions at all? Okay, if that's the case, I'm going to thank you, Bob. All straightforward. I'd agree. It's interesting that we're here talking about Brexit. It is becoming interesting, as I said. It is certainly there, but I would argue that what you said is probably true. Is that inverted commas, it should be straightforward. But as I said, never ever underestimate a politician to use politics to their advantage, and therefore it could be quite interesting. And although the chart on screen shows you a fairly interesting channel that certainly suggests direction in euro sterling, don't be surprised if there's a little bit of tick ups and vols, etc. Over particularly the next 7 to 8 days as we get towards that EU summit that starts on the 10th. But if there isn't any further questions, I wish you all the best, guys. Good luck with your trading. Good luck for the rest of 2020. Let's hope this year can finish off on something of a high because it's been a stinker, let's be honest, and go from there. Just for, okay, so Paul's come through. Is Boris a factor? Absolutely. He's always a factor. Never underestimate a populist leader to make a populist decision. He's certainly been part of the reason this is dragged out. The fact halfway through the year we saw them trying, particularly the backbench, to change the deal. If Boris was feeling politically under pressure that he needed to actually step in, he will. Do not underestimate that at all. He is always a factor, and again, a bit like Trump, he's not as bad as Trump, but a bit like Trump, you never underestimate Boris to change the narrative to suit his agenda, and therefore, absolutely, he's always a factor, and why, again, that if there was vol to come, that's where it would come from. But with that, as I said, thank you guys. It's been a pleasure as always. Hopefully, I'll get to do one more of these before the end of the year if everything goes to plan. Otherwise, have a great night and thank you so much for listening.